Gold, for the day traded with the modest bullish bias, achieved close to 2059 levels and since then have retraced, while crude oil is traded bearish with the resistance on the upside at 73.2. We have discussed this in our Asia and Europe session update that 73.2 is going to give a greater resistance to crude oil. Precisely, both gold and crude oil achieving the highs have reversed. So, can we treat this as a reversal? Can we expect both to trade bearish, or there is still bullishness left, and can we expect gold and crude oil to rise from the current levels? What is going to be our strategy profiting trading gold and crude oil? We will see with the help of charts and indicators. This is the second update for the day. In order to get the notifications, press the bell icon, do subscribe, do like, share and comment. Let's start. First we look into gold, followed with crude oil. Watch till the end. At the end of every analysis, I will give you the trading levels and strategy. Also, if you have not joined the channel memberships yet, join the channel membership and enjoy the additional perks. Let's start first to look into hourly charts. On the hourly charts, we can see gold achieving lower highs here, and yes, it is also giving higher lows. It is trying to consolidate within the zone, taking the support from the 20 period moving average sitting at around 2051. Thus also we have seen it getting resistance at 46.48 zone earlier. Thus this is going to be a greater support for gold, and as long as it stays above 44.45, we should not be treating this as bearish for the day. That is the first observation. Second, on the hourly charts, we have seen it giving consistent bearish candle, then a swing candle, and if it trades about 2055, 56, we can again expect it to move towards 60, 62 as the first targets, and 65. Beyond 65, obviously we are looking forward to 72.5 and higher levels. Stochastic has dropped. MACD is trading with divergence. It is looking downwards. This is a bearish sign here for gold. RSI is looking downwards as well. Coming to 2 hour, on the 2 hour chart, see, we have seen higher highs, and this time it has breached the support levels. It is coming down. Now also one must note that the 20 period moving average sitting at around 2047 levels. So that is why I say these are going to remain greater support levels here on the downside. First 48, then 45, 44, very good support here on the downside. Stochastic looking downwards, trying to trade bearish. MACD is trying to converge. It is not yet crossed over. It is just trying to converge here, and possibly it can try to cross over, but yes, remember it is still a lot much of room available on the upside. RSI looking downwards, trying to trade bearish. Coming to 3 hour, likewise on the 3 hour charts, moving averages here are trading with divergence. This is a bullish sign. We have seen a crossover here. Thus gold is still trading bullish, and on the downside here 44, 45, that is the 20 period moving average, very good support, and below that 40, 42, very good support here with the 50 and 100 period moving average. Stochastic looking downwards, trying to trade bearish. MACD is trading with divergence. It is trying to converge with couple of bearish candles here. RSI almost staying flat. Coming to 4 hour. Now looking at 4 hour chart, see, previous candle was a swing candle. Remember, it has a very small tail on the downside and a very big wick on the upside. This suggests that see, there was a bullish momentum and then it has reversed. Also on the downside, the bearishness is very limited. That is what it suggests. But at the same time, it can give the similar size of candle here, because this is a step candle. It can try to move towards 2050 or lower levels. Remember one more thing here, that see, this zone here, very good support, and again we have seen on the 2 hour 3 hour charts as well. Thus we have to be careful. As long as gold stays above 2044, we should not be, in fact, I will say, as long as 2040 is respected, we should not treat gold as moving averages crossed over here. All three trading with divergence, certainly making it a very good support zone at 40.42 as well. Stochastic looking downwards. MACD is in green, trying to converge. It is not yet crossed over. RSI staying flat. Coming to the daily chart. Before we look into the daily charts and I give you the trading levels and strategy, if you want to learn this art of trading, join my 28th mentorship batch commencing on 28th of January. Register yourself now. Reach out to me via Telegram or email for any of your queries related to the mentorship batch, or if you want to join the Signals channel on Telegram, reach out to me. And yes, more details regarding to the batch and the webinar series are available on my platform www.forexfunda.com or on my free Telegram channel. The platform Forex Funda is having much more information for you, which is based economic calendar is there with the live data releases. The live charts with advanced tools are available, and also you have the community to discuss with your thoughts. And yes, you can also book a call with me there itself if you need any consultation or guidance, and this call is free if you are part of our webinar series. Register for it, visit the platform, or join my free Telegram channel for more details. Now look at the daily charts. On the daily charts, what gold has done, see, it has traded in green so far. It has traded bullish. It has seen highs here, but at the same time, right now, if you look at, it has failed to break past. It is consistently giving lower highs. Thus, we have to wait for it to break past 62-65 zone in order to confirm a bullish reversal. Yes, if it stays above 62-65 zone, we can consider that as a bullish reversal. Else, right now, couple of bullish candles, and see what has happened here. It has achieved the 20 and 50 period moving average. After staying bullish here, it has formed nice flag, and it is still very much forming the flag here. You can see this, and thus it has to give a breakout here in order to confirm the reversal or a rise here. We have to wait for 60 to 65 levels in order to confirm reversal. Now, right now, what is happening? It is opened flat and traded bullish. It can show you swings. It can take it on the downside towards 2040 as well. Be watchful. Right now, we have seen it trading with a slight bearish bias. Stochastic rising. MACD on the daily charts. Now, see MACD on the daily. You can see this twin peak here. Since then, a retracement, and again, it is trying to trade bearish. It is tried to converge. It has not yet crossed over. Today's candle will decide the fate of it. If it trades bearish, if it crosses over on the downside, if it diverges here on the downside, certainly the bearish momentum is going to prevail in the near term for gold. RSI looking upwards as well. Considering this, I will recommend you to sell here at 2048 levels, but with the caution note that 2044, 45, as long as 2044, 45 is respected, we have a probability for it to bounce back or recover strongly. Earlier in the day also, I have shared the same levels, and again I am sticking to the same levels for sell on the up. And yes, before we go for the buying entries, before below 2044, we can look forward to 2040, 42 also is a very strong support zone, and only bearishness is below 2040, where you can look forward to 2036, and then below 2036 is where major bearishness to be seen. On the upside, you can buy here at 2058 levels. Above 2058, see, these were the same levels I have shared earlier in the day, and prices precisely stayed beautifully in the same zone. Yes, you can buy here at 2058, expect 60 to 65 as the first target zone, and once it breaks past by 65, just stay bullish in gold. For the near term, we will look forward to 72.5 and 84, 85 levels. Take your trades accordingly. Right now, it is trying to trade bearish. You have to trade with caution. We have a very, very good support on the downside as well. Now, let's have a look at crude oil. Crude oil has seen a stronger resistance at 73, 73.2 zone. Earlier, I have shared the same, that above 73, 73.2 is where the bulls will take over, and it is trying to trade bearish. See, it is crossed over, it is looking downwards, and now the prices are also divergent from the moving average. Second observation here is what it has done. See, so far it was trading with these higher highs and higher lows. Now it has come out of this retracement channel and it is looking downwards. Thus, you have to be extra cautious. Any drop below 71.4, 71 zone now will be treated as a bearish breakout. Yes, below 71, we can expect it to move $70 levels. Yes, it is trying to show a bearish breakout here. Be watchful. And if you look at the stochastic, this has come to oversold levels. MACD is divergent, MACD is bearish, RSI looking downwards. Coming to 2 hour chart. Likewise, on the 2 hour charts, we can see bearishness, retracement, and again bearishness. 3 candles done. We have to wait for the closure of this candle. Certainly, if it trades below 71.4, 71 zone, we can treat this as a bearish breakout. You have to be very, very careful in between 71.4, 71 zone. Stochastic coming to oversold, MACD divergent and bearish, RSI looking down. Coming to 3 hour chart, similar observation here, 3 red candles in succession, and it is still continuing here on the downside. Now, only buying entry above 72.2 can be taken, but then 72.6 and then 73. If it breaks above 73, you should treat this as a bullish breakout, else it can again bounce, again drop here. Stochastic looking vertically down, MACD divergent and bearish, RSI looking down as well. Coming to 4 hour charts, first bearish candle, see, 2 bearish candle, retracement, first candle, second candle, and this can be a further elongated candle, which means it can try to move towards 71, 71.4 zone, and in fact breach those levels as well. But we have to note again and again, I'm saying, see this, it has also breached this channel here. However, it is still at the higher lows here. We have to wait for it to break in succession these lows in order to confirm the bearish breakout. Stochastic at bottom, MACD is divergent and bearish, RSI is looking down. Coming to the daily chart. Likewise, on the daily charts, the resistance here, then increasingly bearish candle. Yes, earlier it was giving or trading with higher lows, and now it has given a breakout. But confirmation of bearishness is only if you see oil trading below 70 levels, 71 and 70 levels. If these two levels are taken, then only we should treat this as bearish, else it is still trading in the box. Right now I think the drop for the day is there and it is trying to trade bearish. I We cannot expect it to now break beyond 73, but these are markets. If you see it above 73, certainly you should stay long. Stochastic looking down, MACD is in green trying to converge, RSI is looking down. Considering this, I will recommend you to sell at 71.4, expect 71.2, 71 as two major support levels, and only below 71 is where the bears will take over for 70.6, $70 levels, and further lows can be expected. On the upside, one can buy here at 72.2 levels, but then with the caution note that it has to break beyond 72.6, 72.5 levels, and then 73 levels. If these two levels are taken, we can confirm this as a reversal and it is going to rise. Take your trades accordingly, trade with caution, like, share, subscribe, and comment. Join my mentorship by subscription, join my signals channel, or subscribe to the webinar series. Visit the platform forexfunda.com or join my free Telegram channel to get live updates. Thank you very much. Have a great profitable trading day ahead. Thank you.